You ever wondered how much real estate private equity firms make? Well, this is how much I've made in years one, two, and three, all the way up to where I am today at the beginning of year four, running my own real estate private equity firm. I'm laying it all out there. It took me 3 years to crack 2 million in profit while buying 1 to 3 deals per year at the time. And when you see this bump here, that's when I sold a 50-unit property for just under 2 million profit. That was obviously a big sale and something you actually see pretty frequently in the real estate private equity business. The big money comes when you sell deals. Year one refers to our first year of operation, in this case, June 2021 to May 2022. During the first year, we owned and made money off 3 deals. The first is University Street, which was a 16-unit multifamily deal we bought in September 2020. This was a side deal before we officially started our firm, so it's slightly cheating, but it's still an inflow into the business, so I'm going to count it. The second is Jefferson Street, which is a 48-unit multifamily deal we bought in September 2021. The last is Water Street, which is a 30-unit hotel deal we bought in May 2022 and still own. University Street was bought in September 2020 for $1 million. It was a collection of 3 buildings totaling 16 units. At acquisition, the rents were well below market at $775 a month. We cleaned up the asset, renovated units, and brought rents up to $1,200 a month. Under 2 years later, we were ready to sell. The deal was sold in May 2022 for $1.29 million, resulting in a 46.2% IRR and a 1.88x equity multiple, $203K of profit at the deal level. We did have investors in the deal, so not all that profit was ours. Our firm level profit in the deal was $113K, and we also received $105,500 of our capital back as well that we had invested into the deal. So our net inflow back to the firm from this deal was $218,500. Next, we had Jefferson Street. This was a 48-unit deal bought in September 2021 for $2.6 million. The deal involved $800K of initial equity, which we, as the private equity firm, initially committed $280K. There was no acquisition fee charged for Jefferson Street, which is not typical. Usually there is one, but we just didn't charge it for that deal. And the gains for the sale weren't realized yet because we had just bought the deal that year, right? So they ended up being realized in year three, which we'll see. So the only fees realized year one were asset management fees of $15K a year, but only for 3/4 of the year because the deal was only owned from September 2021 to May 2022. And for property management at 4% of revenue a year, also for only 3/4 of the year. There were no distributions during the time as we reinvested all the profit we were making from the actual cash flow back into the deal, so we could sell it for a higher price later on. So 15,000 times 75%, 3/4 of the year is 11,250 on the asset management fee, and 11,520 on the property management fee because it was roughly 32,000 a month in revenue times 9 months times 4% equals 23,000 in profit from Jefferson Street during year one. So up until this point in year one, we've received 113K in pure profit from University Street, 23K in profit from Jefferson Street, and 105,500 of our capital back as an inflow from University Street. Lastly, we also had Water Street, which is a 30-unit hotel deal we closed in May 2022 for $2.75 million. This is a heavy value add deal that involved repositioning a low-end motel into a high-end or higher-end 4-star hotel. As of today, we still own the deal and it's going well. We charged an acquisition fee of $55K for that deal that was booked as profit immediately. And there were no other profits from this deal for year one as it was bought the month the year ended. So just to recap year one, University Street, 113K profit and 105,500 of principal returned. Jefferson Street, 11,500 in asset management fees and 11,500 in property management fees. Water Street, $55,000 in book profit from the acquisition fee. So total inflows year one were 296,500, which is really not a bad haul for the first year. Although we are slightly cheating by including an earlier deal into that, but they're all inflows into the business. As I mentioned, though, the real money was made in year three, which you'll see in a bit, and will be made year fours and beyond. Year two is a relatively slow year. It started in June 2022 and went to May 2023. For those of you who aren't familiar, that time period in commercial real estate was incredibly rocky. Right, values were sky high post-COVID. A lot of real estate deals were overvalued, and the Fed had increased rates, which made it very difficult to get a loan. So it was a bad time to be in the commercial real estate space, and it was difficult for deals to pencil. And since it was only our second year running a firm and we didn't see any deals we really liked, and as kind of a sidebar, we only do deals we really like. We try and target 1 to 3 deals a year, and they're all high margin. We don't do kind of marginal deals. That's just not our model. So we decided to be conservative, and we didn't end up buying a single deal that year. This was obviously tough in the moment since we made way less money year two than we could have, right? Obviously, we didn't get any acquisition fees or anything like that. But in hindsight, it was a great move because we didn't buy any bad deals during this time. A lot of other firms were not conservative. They did do bad deals. And since then, values have dropped and they've actually lost money on some of those deals. We didn't do that, which allowed us to, one, be able to stay profitable, and two, be in a great position to buy new deals going forward, while our competitors are currently kind of stuck asset managing their bad deals, which we really don't have. So year two, we owned two deals, Jefferson Street and Water Street. Remember, we'd sold out of University Street year one. So Jefferson Street, we made $15,000 off asset management fees and $19,000 off property management fees, roughly $40K a month in revenue times 12 months times the 4% property management fee, for a total of $34,000 in profit on Jefferson Street. Once again, we did have positive cash flow on the asset as the asset really, really outperformed, but we decided to reinvest that into the deal instead of distributing. And as you'll see, this really paid off year three. Water Street was still under renovation during this time. I mentioned this above, but it was a heavy repositioning play that we knew would take a while to complete. We did still earn our asset management fees of $40K, however. So the total for year two is actually pretty low, just $74K in profit for the firm between the two assets. Year three, however, was a huge year. The third year started June 2023 and went to May 2024. During this time, we sold Jefferson Street and held Water Street. Jefferson Street was sold in July 2023. Remember, we had bought it for $2.6 million in September 2021. During the hold, we increased rents from $700 at acquisition to roughly $1,200 at disposition. Some of the renovated units even achieved rents above $1,500. Due to the significant increase in NOI, more than doubled it over the course of the hold, the deal was sold for $6.4 million. This resulted in $3.35 million of profit at the deal level, 145% IRR, and a 5.2x equity multiple. Obviously, these are really, really good returns. And like I said, that's because we really try to only do good deals. So we choose them very carefully. The deal did include investors, though. They obviously made a ton of money as well. So of that $3.35 million deal level profit, $1,776,789 of it was ours. We also made roughly $2.5K in asset management fees and $3.3K in property management fees. Those fees are obviously tiny, but I thought I'd mention them anyway. Additionally, we also received our principal back of $280K that we had initially invested in the deal. Water Street, we just took our $40K asset management fee, as all cash flow from that deal was either put back into the asset in the form of renovations or used to pay expenses. That brings the total for year three to $2,102,589 in total inflows back into the firm, split between me and my business partner. It's a big year, but this is typically how it goes, right? In private equity, making $2 million in a year is actually pretty small. You make okay money when you hold deals, but you make huge money when you sell deals. I'm currently working on scaling up the firm right now into doing larger deals. And once we stabilize, likely around year 5 or so call that 2 years from now, we should be able to pull in 2 to 5, possibly even 2 to 10 mil a year in pure profit. That's the goal, and we're pretty close to getting there. If you'd like to work with me one-on-one to learn how to do this yourself, you can apply to do that in the link in the description. I've worked with over 100 clients, and as you can see, have gotten extremely good results.